Speaking of Alphabet earnings, let's bring in our next guest to break down what to expect from those results tomorrow. Joining us now is Gil Luria from DA Davidson. Gil, we've seen a rally ahead of these results. Is it warranted? What are you looking for?
Yeah, Google has caught up a little bit. It's still underperformed most of its mega cap peers. It's still underperformed the market. But over the last few days, there's been this sense that there's some good things that we're going to see in the quarter and in the results. And some of the bad things, some of the things we're worried about are probably not going to manifest themselves in the short term, which is why the stocks rallied into earnings tomorrow. So the good things are the consumer's still strong. The advertising market's still strong. We're going to get a little benefit from currency. All those things are happening. In the cloud, we're going to get a benefit from AI. So those things are happening. They should be in the quarter. They should bode well for the results. The things we worry about, what happens down the line with search, what happens when Safari takes other search engines, when ChatGPT turns advertising on. All those things, we kick those cans down the road, and we're focused on more of the things that are going to bode well for the quarter.
How about capex as it relates to AI? Is elevated spending a good thing in this environment, especially when you have talent wars and everything else playing out?
So I would fully expect Google to follow through on the growth in capex for the year. Whether or not they choose to raise their guidance for the year is another question, because as you bring up, the cost of AI is no longer just data centers. The talent war is now manifesting itself in billions of dollars of price tag. I would expect Meta, when they report, that their expense in the quarter on AI for talent may be as big as their capex for the quarter. For Alphabet, that may not be the case, but it's still an additional very large expense that's going to start mounting for all these companies.
How closely are you watching this, quote unquote, winning the AI race event that's happening down in Washington tomorrow, where President Trump is supposed to address the public? We are seeing this growing intersection between AI and policy here, but we haven't seen meaningful regulations, for example, the way we are in the crypto space.
Well, I would expect a lot of really big promises, but those tend to happen at the political events, and then the follow-through is a different matter. We just saw that with Stargate, where in an event a few months ago, the size of the project was announced at $500 billion. And then quietly in the news over the last couple of days, we're probably talking about a tenth of that. So I'd expect big announcements about the size of investment, especially in the U.S. The follow-through is a different question. And then in terms of regulation, since the state-by-state regulation is now allowed, that didn't pass as part of the large budget bill, then I would look for maybe some federal guidelines for what we would expect from the large frontier model companies. This is becoming increasingly a national security question. So you would expect some conversation about what regulation we should expect, which isn't necessarily a bad thing. Regulation at the federal level could diffuse the risk for regulation at a state-by-state level.
Yeah. Okay, so very quickly, because we have less than 30 seconds here, how much do Alphabet Cloud results provide a read-through to Microsoft and Amazon?
Very much so. If we see Google Cloud accelerate beyond 28%, that bodes very well for Microsoft Azure, which grew 35% last quarter. They may grow even faster. AWS grew 17% last quarter. They could be growing faster. So that is definitely something we're going to be very focused on to see if Google Cloud is in fact accelerating as the usage of AI grows.